Hey, what is going on, everybody? Welcome back to the channel all about real estate. My name is Lewis, and this video is going to be absolutely awesome. We are going to be discussing why, according to REDFIN, buyers are quitting the housing market in record numbers. Now, they are, of course, citing reasons like higher interest rates or low inventory, but the article goes even deeper than that. Now, if you are new to the channel and you like all things finance, real estate, and investing, consider smashing that like button, tapping that subscribe button right there to see more weekly videos just like this. And if I could ask a small favor, if you wouldn't mind leaving a comment, letting us know what you think about the market, it really helps me learn and grow, and it really helps others learn and grow. And without further ado, let's get right to this article. All right, so up on the screen, I have the article from REDFIN. It is the housing market update, and it says more sellers drop their prices, but buyers find little relief. And I've obviously gone through this article already. I've highlighted some of what I found were the key details, but in addition to that, I'll go ahead and link to this in the show notes if you would like to take a closer look. So a couple things here. Home buying is as competitive and costly as ever as soaring mortgage rates make the market less inviting for many would-be sellers. So real quick, what they're talking about is that the rising interest rate is actually sidelining some of the sellers out there. Even though the sellers have record levels of equity in their properties, they're thinking twice about listing them because they don't want to necessarily go out and buy in this market. For one, there's not a ton of inventory, and for two, they're going to be dealing with higher interest rates. Now, I read a statistic somewhere that said 80% of all homeowners out there that have a mortgage are financed under the current market rate. And I think they mentioned even something around 3.5% or lower. So a would-be seller would actually have to list their property. If they intended to buy in this market, they'd be looking at mortgage rates in the mid-5s. So even if they can capture all that equity, they'd have to roll it over, and they'd ultimately get a mortgage at a higher price point, and that is deterring some of these would-be sellers. The article goes on to say that the share of home sellers who dropped their asking price shot up to a 6-month high of 15% for the 4 weeks ending May 1. So in other words, the month of April, sellers have started to drop their prices at record levels, approximately 15%. Now that is up 9% from a year earlier. The 5.9% increase is the largest annual gain on record in REDFIN's weekly housing data back through 2015. So this is the highest price decline we've actually seen in several years here. Now, for home buyers, the typical monthly mortgage payment skyrocketed a record 42% during a new high during the same period. So in other words, to own a home, it has become 42% more expensive. Now, the article goes on to say that home buyers continue to be squeezed in nearly every way possible, which is causing some to take a step back from the market. That's according to the REDFIN chief economist, Daryl Fairweather. Unfortunately for buyers hoping to find a deal as competition cools, sellers are pulling back even faster, which is keeping the market deep in sellers' territory. So even though price drops are becoming more common, most homes are still selling above asking price and in record time. So you have two items that we're facing here, two cross currents. You have the supply side and then the demand side. Now, for the demand side, that would be the buyers that are lined up ready to purchase homes. Well, with the increase in mortgage rates, it's essentially a demand destruction. So fewer and fewer buyers are interested in purchasing with these higher rates. But then on the supply side, the sellers ultimately control the market there. So the more sellers that want to list, it brings more inventory to the market, and we get more supply that comes online. Well, if sellers are also pulling back, and they're pulling back faster than the demand side is dropping, you still have a supply-demand imbalance, which is keeping the market really strong and keeping prices elevated. Now, this article talks about leading indicators of home buying activity here as well, and I found some of these stats really interesting. So this actually says that fewer people searched homes for sale on Google. Searches during the week ending April 30th were down 7% from a year earlier. So you have less people actually going online and searching for homes for sale. The next leading indicator is that the seasonally adjusted REDFIN Homebuyer Demand Index a measure of requests for home tours and other home buying services from Redfin agents was actually down 1% year over year during the week ending May 1st, and it dropped 10% in the past 4 weeks compared with a 1% decrease during the same period a year earlier. So now I know this is a bit anecdotal because it's just talking specifically about Redfin and the service they offer buyers and sellers, but less and less folks are actually requesting home tours. It goes on to say that touring activity from the first week of January through May was 24 percentage points behind the same period in 2021. So we're about 24% fewer touring activities, and that's according to home tour technology company called ShowingTime. ShowingTime is actually an app that real estate agents use to help coordinate their showing appointments. And so that is pretty fascinating because not every real estate agent actually uses this software, but many do. It's becoming widely adopted, and more people are using it because it provides agents with a way to schedule and actually see a calendar of all of those showings and track who's in and out of the property as opposed to doing it manually. Mortgage purchase applications were down 11% from the year earlier, and then mortgage rates increased to the highest level they've seen since August of 2009. They are sitting at about 5.27%. Now that is an average, and I believe that even includes the government products, so your FHA and VA loans. So if you're looking at just a traditional, conventional mortgage today, rates are actually going to be a little bit higher than 5.27%. Now, as we're wrapping up the article, it left us with a couple key housing market takeaways, and this is for 400 plus US metros. So this is going to be an average nationwide, but the information is very, very interesting here. It says the median home price is actually up 17% year over year. This is the biggest increase since August, and it's a record $396,125. So you have the median home price on a national level just under $400,000. Now the median asking price or listing price is actually going to be at about $408,000. So it's slightly higher. Homes are selling and closing slightly lower than that median list price. Now this I found really interesting as well. It says the monthly mortgage payment on the median asking price home hit a record of $2,404. That's with current mortgage rates at 5.27%. That's up 42%. It's an all-time high, and it's down from the average just a year earlier at 2.96, with the average mortgage payment at $1,688. So now I don't know if this actually includes taxes and insurance. I'm going to assume that it doesn't, but that is just your principal and interest payment on average. Pending home sales were down 4%, so you have a little bit less sales activity. And it says new listings for homes for sale were down 6% from a year earlier, and active listings fell 18% year over year. So you actually have less inventory than we did in prior years. Now, but to give you an idea on the demand side of things, it says 56% of homes that went under contract had an accepted offer within the first 2 weeks on the market. That is actually up from 54% just a year prior. And then it says 42% of homes that went under contract had an accepted offer within 1 week of hitting the market, and that's up from 41% a year earlier. And then the article says that the median days on market is about 15 and a half days, and that's down from 21.2 days just a year prior. And then even crazier, it says that a record 56% of homes actually sold above the list price versus 47% a year earlier. And then on average, homes are selling for 102.8% of the original list price. So in other words, that homes that are actually listed and they're listed properly, they're actually selling for 2.8% above the asking price on average. Now, what I'm really curious to see is if prices actually stay steady, if they rise, or if we start to see a pullback in the market to where they come back down to make things a little bit more affordable. We're obviously seeing price reductions at some price points and in some markets, but only time will tell if that will happen across the board. So we're going to continue to monitor this. We're going to continue to see what unfolds over the coming weeks, over the coming months. We're going to see how this market ultimately plays out. But for now, some of the buyers are just really taking a step back and they're reconsidering their purchasing decisions. And a lot of that has to do with the rising cost. Now, it just doesn't end with housing. They're seeing rising costs just about everywhere. I know that I am personally. The cost of food, the cost of fuel, the cost of daycare, all of these different things are really putting additional pressure on the market and on buyers out there that are looking to get involved. So anyway, we will see where this goes. If you found any value whatsoever, please consider liking and subscribing, and we'll see you on the next video. Thank you.